Gary Kaltbaum, welcome back to F.A.C.E. How are you? Contributor to Fox Business and radio show host and analyst extraordinaire. How are you? How you doing, Gary?
Greetings, all is well. How are you?
Good to see you, even though I can't. Good to hear you. You want to share your screen and tell us what's top of mind?
All right, hold on. Share screen. I got to figure this out here. Share screen.
Down at the bottom.
Share. How's
Here
that?
it comes. Coming up. Okay.
Got it?
Yeah. So what kind of bank is this? Is this where is this? It's an ADR.
Oh, don't forget that. I don't even know why it's up there.
It's in India.
Yeah, that's a good looking chart.
Yeah, it is.
First off, let me just state for the record, and it's something I've said for, I don't know, since Christmas of 2018, when Jay Powell showed who he was. I continue to weep that we have to worry on a daily basis what comes out of his mouth, what comes out of Bullard's mouth, and the rest. I weep that we cannot have free markets, the freedom of traders and investors and speculators to do their thing without the interference or interloping from these people and their whims, and these same people who have been wrong on just about everything. And now we have another day where we must wait on what he decides, the most powerful man on earth that has been wrong 100% of the time. And people disagree with me. People disagree with me, but I believe he was 95% of the inflation spike with the printing to 9 trillion and getting the European counterpart to do the same at the same time. And look where we are now, having to deal with what we're dealing with. But that's just
hard to give credit to someone who started the fire, trusting them to put it out. So, so I get your drift, and it is a more difficult trading environment with this thrown into the mix, but we have to deal with it. So dealing with it, what's your take on the market, Gary? We've had a decent bounce from October, not as the magnitude smaller than we had during that June to August rally. Do you think we have a bottom there at that 3,500 level, 3,600 level?
I think a bunch of things have put in their lows for the cycle, but I think a bunch of things have not. And, sometimes we get what is called a sore thumb, the one that really sticks out. And it's really amazing to me, but also not, in that I have been trained by O'Neill, Stan Weinstein, Gil Morales, some of the greats. And when I say trained, I learned from them. O'Neill, I went to many of his seminars. Gil was there also. And I'm always a big believer in the main trend and big picture. And there's one thing that stands out for me is, first off, look where the Dow went. Look where the Dow went to right here. And then amazingly, look at the Nasdaq. So maybe this is the equivalent of the Dow. It's off a little bit, but you get that the point. I'm just thinking, if the Dow comes in, what's to keep the Nasdaq from just taking this sucker out? And then we're talking about the 40s in the Nasdaq, if not more. So we'll see.
Bifurcated market.
One of the most I've seen in a very long time.
How about in your career, Gary? I bet in your career.
It's up there.
All right.
The Dow versus the Nasdaq. But it's also, there are certain rules that I follow that have been handed down to me. And one of them was Bill O'Neill said to me and others in a workshop, in bear markets, the past leaders will drop on average 70% from their highs. And I never believed it until it happened in 0 to 03, happened in 08, and now it's doing it again. And I think what you're seeing here is the big leaders were the tech, were the software, were the internet, were the mega caps, And I think what you're seeing is exactly that. They are down for the count. When I say they ain't coming back, at least for a long while, there'll be a few. I just say it's stunning. And, the latest one is this CrowdStrike, which is down. And just so you know, this is one of those names where I get 100 emails on this stock all the way down. It's one of those famous names, and it's got to go back up, earnings and sales. So my main message to all your great viewers and listeners, if you have not learned a lesson from the past year and a half, we called all the bubbles. Our main theme on the crypto was 90% of the coins would drop 90% or more, with most going to zero. And then the next line, it's just a blanking bubble. If you haven't learned the lesson about how far down things can go, you better take a step back and learn, because this will happen again in the next bear market again, because history does repeat itself. So for starters, this divergence between the Dow and the Nasdaq is worrisome. It is risk off versus risk on. I don't like, other people do, but I don't like these U shapes and Travelers and IBM, things like that, because if they start coming down, look out. It reminds me of money coming out of risk on and going into these names, and I don't think it lasts. But we're open to all outcomes, and we'll see how it plays out. It's a tricky freaking market, and I have been the most patient I have ever been in history, tenfold in the last year, by just sitting on my hands a lot, and it's paid off big time.
Do you think the dollar has peaked, and do you like the miners, Gary?
There's the UUP.
Yeah.
All we do right now is draw. We thought that the dollar was peaking here. If it takes this out, there's going to be more to the gold. Simple as that.
Okay.
If it holds here and starts turning up, that'll be another story. But leave no doubt. And I said to you about sometimes things are so evident. Look at this bull market in the dollar versus currencies, other currencies. Holding the 50-day the whole time, finally hit a wall right here. Simple as that. And look at this right here, the exact opposite in the gold. And when the dollar stopped going up, gold stopped going down. And when the dollar went down, here goes the gold. Just these direct correlations must be watched until they're not correlations anymore, because you never know how long they last. And the same thing has happened for the indices. Almost to the day, pretty much to the week, between the dollar and yields and markets and commodities, until it's not. What I'm waiting for right now, if we get to the point where the indices gag as interest rates come down, then I think we head over the mountain to where the market cares about yields and now caring about bad earnings and potential for a pretty good recession. That has not happened yet as of this second.
Okay. Your take on this recent bond rally we've had, which is, do you think that we've seen the lows in bonds? Because that may be, but everyone thinks that yields at peak. Can't there be like another push up in the 10-year to 440, 450?
Oh, absolutely. It can. And look, we saw it here, and I remember they told us it was the peak here, and we had a good drawdown. And by the way, the market did this at the time. Right. To me, this is kind of sort of a normal short, maybe intermediate term pullback. And as I showed you the dollar and drew a line under it, we'll see if yield starts coming this way, we'll know. But we'll see if they start going that way. We're at a moment in time where we just gotta, usually I can say to you, I'm pretty sure this is what's going to happen. I can't tell you just yet, because we're dealing with mouths. We're dealing with Powell, who, by the way, if he's real tight, it may take yields down, believe it or not, that maybe he's fighting inflation. You never know what the reaction is going to be. The old line, it's not the news, it's how the market reacts to the news. always speaks volumes, especially when you got all these yappers. So yeah, I think we're at another moment in time right here for the dollar, for yields, the whole bond market complex. And again, it's just a moment where I'm been a big time spectator as of late. For somebody that manages money and has a service, not easy. But
what do your clients say? Like, while the S&P rallied from 3,600 to 4,000. Gary, how come we're not in? Should we get in now? How about now, Gary?
Well, we did get in, but not in individual stocks. We bought in this confirmation day right here on the SPY. I wish I bought the diamonds, which was much better, but I have still a lot of cash. But they're still thanking me big time because we missed the whole bear market. The only thing we ever did in the bear market is we bought some counter trend moves, and we lost a little on some and we made a little on some, but pretty much we're, in the right around high water mark from the top of the bull market that turned into bear. And why? Because everything turned down. And I am so focused on pattern and not on what anybody's saying. And of course, if you listen to the perma bulls, you would have been buried. And of course, if we get into a bull market, be careful about the perma bears. We just pay attention to what the market gives. And when the market ain't given, we'll just tend to take a step back and, hang out. It's just very tough environment to commit.
I'm curious, while you're sitting in cash, what instrument do you put it in? You put it in money markets, T-bills? Do you go out and grab a little bit of the maturity at 4% on a 10-year
There's your 3-month T-bill.
That's what you're buying?
Yeah, fortunately, we were getting zero a year and change ago, and fortunately, even money markets are up around 3%. So that's the
why not have the safety of T-bills rather than money markets? You worry about money market funds and some of the things that are going on with rates, that there could be that FTX might be a symptom of what's happening in the broader system.
I think FTX is a symptom of a bunch of crooks and being involved in
where was Gensler?
I don't know what to tell you there. I'm not gonna. I think all these people, the regulators, really don't want these things to happen, and they want to do their job. And I think a lot of these things, these bubbles that came out, are very tough to gauge. I've been yelling and screaming about them since day one. I can't begin to tell you the hate mail I've received, the death threats I've received just by saying I think it's a bubble. Gee, sorry for the opinion. But I'm not so worried about money markets, but I do know some smart people that do talk about them. So we'll see. And let me just state for the record, if money markets ever get in trouble, we'll see the S&P down at 2,500 pretty quickly. So let's hope that doesn't happen. So the good news is for cash, we're finally getting something. But my main point again is that for a long period of time, we've been doing little bits and pieces here and there, but I'm just scared, lists on a daily basis, just trying to get major trends right and just trying to drown out the noise, and it's not easy. The latest is China, what's going on there, and it's rallying up, but do you trust, because you can wake up overnight and China puts the screws again to the companies that that they're very good at? So tough call.
Yeah, why isn't the guy, I'm reading some of the feedback from the community. Why isn't Bankman in cuffs like Madoff was 3 days after it broke?
Beats the hell out of me.
We'll have to ask Charlie Gasparino about that.
And I think he's being interviewed by the New York Times today or something.
Yeah, Charlie's on this story. Yeah, Charlie's
I'd be kicking the guy in the whats, let alone asking them questions. This is look, we'll find out in the end, but for all intents, but this guy and his parents were taking all this money and buying up real estate and spending it on politics and all kinds of crazy stuff. And I just think this is one of the outcomes. You always find out the goblins when it comes to these things, and hopefully he's put away if in fact it is found out that all this stuff is true.
Okay. All right. Well, Gary, we have your message. Play it safe. Difficult to be even take intermediate term positions with all the jawboning going on by the Fed.
Just a couple of other notes.
Sure.
So somebody I follow said the other day, they find stocks that go up but don't stay up. That's happening a lot. Things that look like they're breaking out of range, like this Monster beverage. Look at that great breakout a few days ago. Boom, tucked its head in like a frightened turtle. So there's been 100 of these things, and that's why we just take a step back. Bull markets will have things like this breakout and never turn back, and they
never give you another chance.
Yeah. Exactly. And your PO that you didn't get in. And I think there's maybe 5 names that I'm upset that I'm not in. Something like an SMCI. Why didn't I buy that on the earnings? So as long as there's not that much. The other thing I do want to mention is the oils. I've been flummoxed. Here's oil, and let's see if it holds here. I've been flummoxed how you had oil prices drop so much, but you have oil stocks so strong like this.
Yeah.
And I'm hearing a lot of people saying that oil stocks are going to crash soon to catch up with oil prices. I'm not so sure of that. So I'm letting you know, I'm still watching like a Hess here. If it sits around and then can break through here and hold. So I'm still watching some of these oil names if oil prices hold. So there's some things that are still out there, but just a lot of weird going on. But my main message again, and people like Druckenmiller and Tudor Jones all say it very best. They know a lot of people that have better picks than them in the market and have a better percentage of wins than them in the market, but they know how to play the downside better than everybody, and they know how to get out before disaster hits. My main message, again, is when you have things like a CrowdStrike or a Meta, look at these down moves. There's got to be some recognition for everybody to not pay attention to Wall Street that'll reiterate buy recommendations all the way down while institutions are just selling crap loads of stock. And you can actually see it in price and volume on a daily basis, but people don't want to listen because that word hope gets into the fray that it's going to turn back. And then you end up in the web where finally you say, I'm down so much, screw it, I don't care if it goes to zero. My message is never let that happen to you. Go get the great technical analysis books on topping markets from bull markets and study them like crazy, because this will happen again after the next bull. And it is incumbent imperative for people to protect capital when capital has to be protected. The amount of money that's been lost in the bubbles like a Tilray, recently they even ran the Bed Bath & Beyond to 30, it's down to 3. These things are life-changing for people in their 70s that have to go back to work because they were in stable coin that opened up at 0 the next day. So just very important. You really learn lessons from this. Get your wits about you, because the protection of capital is so much more important than everything else. And the last year and a half dictates that in noises that should be yelling and screaming out there. And unfortunately, not enough is being talked about. There's still about how much money we're going to make going forward and blah, 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 in the next bull market, and buy Apple. It's a great value here, and Amazon. So that's my main message, good friend.
All right. Well, I'll tell you what, Gary, great message. And you're right. If we're all students of the market, that means we study, not being lazy. You have to put in the time and the work to have this type of conviction like Gary does. Okay. So if you're a student, study, don't be lazy. And Gary, thanks so much for, coming here and catching up with your views. Don't worry about what you miss. There's always another bus around the corner. And especially now, buddy, who can expect perfection at the crap table?
Not
buddy.
me. And by
Anyway,
the way,
go ahead, bud.
we're real appreciative of what you do and with all that surrounds you in teaching everybody the things you teach on a daily basis. So I congratulate you for the hard work that you all put into.
Thank you so much, Gary. You could follow Gary on Twitter at Gary Kaltbaum. And where could they find your radio show?
GaryK.com. We post it there. We post it on Twitter. I'm on Fox Business every day. Fox News usually once or twice a week. So check it out. We post when we're on also. Okay. Again, we're pretty pointed. We don't pull many punches out there. I can tell you that.
Okay. Well, the voice of reason in a world of madness, Gary Kaltbaum. Thank you very much, buddy. My trading.
Be well, my friend.
Brother.
Thank you.
All right. That's it. You're welcome, everyone. Gary, people appreciated it. And you're welcome, Patrick. And you could join the team. It looks like about 20 minutes on the morning edge. Remember, don't just count your pips, count your blessings. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.